Hi, everyone. As expected, we had plenty of volatility, and I'm sure we got a lot to talk about. I hope our viewers are risk managing it well. We had multiple signals and warning signs. Um, let's start. S&P and ES futures closed below very important level, which is a yearly open. So technically now ES is negative for a year, and Q is negative for a year for 3 or 4 days already. So now we have confirmation, and it will be very interesting to hear what Ted and Raphael thinks. Whether this down move has legs or not. So yeah, let's start. So Ted, a lot of economic data and a lot of statements from Trump 2.0. So what do you see in the markets and what are your views?
I see a lot. I don't know what's up and what's down right now, but let me share my screen here. And here we are. Yeah, so I think this says it well. We're so back, or it's so over. Let's see. Let me start my slideshow. All right. So again, I'll touch on briefly on macro regime, spend a little bit more time on policy because I think our macro regime is in question. And then some time on market signals, which for me are pretty strong right now, and then positioning and trades. So macro regime, my macro service unchanged despite Bitcoin getting crushed, despite the SPY getting crushed and gold under pressure. We're still in growth and inflation apparently. There's not been a lot of new data since we last spoke. We're still GDP now, still pricing at 2.3% for Q1. That is, flat with the end of last year. We did get a final GDP number for Q4 at the open today, and 2.3% appears to be where we are. Let's see on a go-forward basis. We talked about CPI last time. CPI is ticking higher. We were up to 3% on the headline. We were up to 3.3% on the core CPI. And then tomorrow we have PCE. This number is pretty much etched in stone. By the time they get CPI data, they pretty much know what the number is going to be. I'm showing both the year-over-year change on the Cleveland Fed, 2.5% headline, 2.66% core per Cleveland Fed, and then your month-over-month numbers, which is often what's traded on rather than the year-over-year number. But we do see next month inflation is expected or projected at least to drop on a year-over-year basis, as well as pretty sharply on a month-over-month basis. We talked about policy last time, and we hit on 3 prongs. One, policy, Powell relatively tight, Trump and Besant focused on the 10-year Treasury. They're not calling on the Fed to lower rates. They're going to do it for them. And then we talk about the Kevin Hassett, Trump's economic advisor. He wants inflation under control. And how is he going to do that? To increase supply and reduce aggregate demand. So right now we're in the process of reducing aggregate demand. My view of the White House plan is step 1, reduce aggregate demand through DOGE cuts and mass firings. So we're still in step 1. We see the administration working on step 2, which has been disconcerting for a lot of people in terms of settling with Russia, increasing oil supply, getting the market flowing with more oil will help bring inflation down. Once we get into the economic slowing that appears to be manifesting, they will goose the economy with tax cuts, universal basic income to business. Last time in COVID, that was the Paycheck Protection Program. It'll be a business-focused stimulus. They'll move away from Biden-oriented focus and do much more of a business-to-business focus, is my view. We've seen in the headlines starting to show the slow, and these are just headlines in the last 24 hours. The Conference Board showed consumer confidence dropped 7 points. It's now below 80 at 78. That usually signals a recession, according to them. Big driver in the economy has been home sales in the U.S., prices have been up, and even despite interest rates, yet now we're starting to see home sales slow. We saw home sales slow 10.5% last month compared to estimate of 2.6%. And then this morning, we also saw pending home sales drop to the lowest on record in January. And then this morning, we're starting to see the effect of the DOGE cuts and the collateral damage associated with that. Initial jobless claims rose to 242,000 from 221 estimated. In the Fed funds futures market, we've actually started to see some movement a little bit. We had about one cut priced in at the first of the year and has been holding on. Now we're starting to see maybe some further cuts as we move out the year. I'd keep an eye on this. I expect that that's going to come because, and this is kind of related, is we've seen after the 10-year 3-month yield uninverted, that typically forecasts a recession. We've actually seen it invert again. And I expect this to be relatively short term. We have the 10-year now down below 4.3%, and we have the 3-month T-bill, which the Fed controls, at just above that at 4.303% last I checked. I fully expect that we're going to get a bull steepener in this. The bull steepener will come as the Fed starts to cut rates, which is my view. They said they weren't going to do it. I think they're going to do it, and it's going to just take a little bit of time. Next up, market signals. This is the same one I used last time. I went over this AAI sentiment survey. Yeah, it's an old survey. It's worth nothing. It's the Association of Individual Investors. A bunch of 60-year-old guys like me have been bearish. They got bearish on 213. That was 2 weeks ago when we talked. Well, could they get more bearish? Apparently so. So this just came out this morning. We see AI sentiment down to almost levels, in bearish levels of the March 9th, 2009 low. That hit a 70 of bearish levels. Normally one would fade this, right? This is sort of this, the dumbest guys in the room are retail like me. And so these are the things that people would normally fade, yet we're seeing these numbers at what, near record all-time highs. And so I think it does have some value, just in terms of how retail at least is thinking. Maybe they aren't the stupidest guys in the room. On Friday, last Friday, we got the my sell signal on the weekly SPX as this broke down, which is the Williams percent R line on a weekly basis from a very overextended level. But these don't always work. But when we get a double one of these things within a few weeks of one another, it usually works pretty well. And so we have seen a sell-off. I posted this, I don't know when I got this chart, but it was earlier today. We probably closed down below. Yeah, we closed down below the 58.90. I also pointed out that I got a buy signal simultaneously in the VIX. We've seen volatility creep up. I think we closed up around 21 or so today, if I'm not mistaken. So yeah, definitely, VIX 2120. So we have seen that move higher. US dollar has been on a sell signal. We certainly, that's in question today. We certainly saw the dollar respond to the sort of asset sell-off across the planet here with a bid. And so, that sell signal is now being questioned. I had been long, and I showed you last time, long FXC on a signal that failed. Bonds still remain bid. We saw a little bit of a sell-off today. We've got some mean reversion going on against primary trend, but bonds still remain bullish. They're definitely extended top of the range. It makes sense for some profit taking here, and as we come into month end, a typical rebalancing process where people sell their winners and buy the losers. So we may see some of that tomorrow as people reposition, and perhaps saw some of that today. Europe has been super strong. I mean, DAX piled on another 1.7, 1.8% yesterday. It is extended. Not a buy recommendation at all here, but we have been long since mid-January. Commodities, I don't know what to say about commodities. They just keep, I got a new sell signal forming in PDBC. So it's been tough to hang on to this and to build any sort of a position in commodities. It's chopping around big time. And then I had a buy signal a couple of weeks ago on the 7th in metals, and that is now being challenged as well. So where I am currently, I am still short dollar trades. I am long gold, GDX, silver, and DBB. I'm long bonds across a variety of different ETFs. Long CTA, I did get my stop hit today. IVOL, which is an interest rate product, interest rate volatility product, and TUA, which is a levered 2-year product. Long Europe, non-US, developed markets, EEM. I cut SPY and QQQ, so I took a quarter off of those positions in my portfolio when we got the sell signal on Friday, and subsequently stops have been hit. So we're out of those trades. And then BTC is on the margin for me. From I wanted to start here, which is the SPX chart. So we closed on the lows today at 58.60. Vi was calling out the 59.60 level, which was also a key level in my work. And he can explain his level, but my level was really about where trend was. And we saw that taking it out with a vengeance over the last several days. And that said, we remain in this 6,100 to 58.50 level. The question is where to from here. This was a big red down day today. NVIDIA was down 8.5%. Qs were down 2.72%. It's messy. I'm not wanting to be a buyer, but I wouldn't be surprised to see a pop in this over the next 24 hours or so. Also want to take a look at, we looked at this last time. This is FBTC, which is an ETF that tracks Bitcoin. Similar sort of chop range that now has finally broken out. I kind of see this as a lead, and it wouldn't surprise me to see SPX follow suit. Going to other trades, short dollar trade. I mean, this has been working pretty well. As you recall, I was long. I got out of my positions back in mid to late January. And we're basically back as sort of a mean reversion trade today with the UUP tracker up 70 basis points. Probably a good spot to load up on short dollar trades. I'd like to see a little reversal before I add. Been long FXY, worked really well. It is pulling back here. This is the Japanese yen. It's not really at my buy level yet, so I'm not adding anything to the position. FXC, this is the Canadian dollar or the loonie, but added to positions here on the pullback, got stopped today. So it has not been working well, was working well, has failed to work well. This is to do with a lot of the tariff talk that's been going on, I'm certain, as Trump has reinforced the 25% tariff across the planet, apparently. So anyway, we've got FXC moving out of my portfolio. Gold. This is one of these things where the bull trend doesn't really offer you a lot of opportunities to add to positions, not enough of a pullback to add. I actually got a pulled back last few days. I added on the 26th. I added today. My stops are not far below this. So as I'm adding stops here, I've actually built out a full position. It was at a half position, but I've used the opportunity to build out the full position with stops very close by. If I lose here, I'm not going to lose a ton. GDX. GDX and I have a love-hate relationship. I was a seller into this strength, taking some profits. I did buy on pullback, bought on pullback the other day. My stops again are not far below this level. I am letting it sit. I'm not intending to add to this unless we get a little bit of a green candle tomorrow. I may add a little bit to get my full position. I'm at about 80% of my position right now. It's still bull trend. Whoops. Silver, similar situation. Have not added to the position. DBB. Added to the position yesterday. My stops are not far below. It is in question. So we are in risk management mode here. BND, which is one of my bond positions, continues to do well. Happy with bonds. They are a good diversifier for a diversified portfolio. BNDX, very similar, although not quite as bullish, but hanging in. And then LQD, which it's doing okay. I would expect if stocks come off that this will also come off, along with HYG. Well, sorry. So yeah, I was going to go to HYG, and we did see that come off some today, although that is hanging in there pretty well. Other bond positions just very similar. This is the 10-year. I've owned that for a bit. This is TIPS. I added to the position back on the 12th, doing well. So still bullish bonds. EMB, which is emerging markets, also bullish bonds in that space. HYG we touched on. CTA, this is a trend following managed futures. I have a pretty large position. I actually filled out my position yesterday. I was quite close to my stop level, and I hit stop today. When I hit a stop, I take a quarter of my position off. Oftentimes, my stops are where you probably want to buy, but they're trailing stops and they get moved weekly. And so we're at a spot where if tomorrow we stay at this level or lower, then I'll continue to sell the position. Eyeball, which is it's a steepener trade. It's been a great position. It's starting to work. I think last time we talked about it, I was ready to give up on it, but my stop wasn't hit. So I'm stuck with it. It's really starting to move. Thing yields pretty well. Yields about 4%, and starting to perform well along with bonds. And then TUA, which is a leveraged 2-year product, put out by Simplify and Harley Bassman, is continuing to do well to get a levered play on your 2-year note. MDY, cut this. We talked about this last time, and you can just see, bought, sold, and saved my ass from further damage by getting out of the position when I did. EZU, we talked about this last time as well. EZU, a European equity ETF. I said it's oversold. I should take profits, but I'm feeling greedy. And so actually the next day after we met, I took some off. And I am a likely buyer in the 51 range. I still think Europe and ex-US have legs. Likewise with EFA, all world developed markets, ex-US, I would be a buyer here in the 81 range. And then EEM, I put in I was at a smallish position, and I needed to increase the position size by basically 3x to get where I wanted to be. And so I had an opportunity on the 24th on Monday. I had an opportunity again today, and I actually, into the close, I had a limit order at 43.85, and that was also filled. So I actually am at a full position, and I'm not, again, it's not far away from my stop. So if this turns and runs on me, I'm happy. If not, I get out. And then PDBC. I added to my position, filled out my position yesterday. My stop is below 1341. I bought yesterday at 1345. It's hanging in there, but it could go at any time. And so I'm ready to pull the trigger and get out if I need to. But at the same time, it's not been hit. So I'm remaining long PDBC, DBA. I'll skip over that. Okay, so that's basically it. So a lot of stuff, what's working is bonds. What's not working is pretty much everything else. So that's where I am.
Yeah, interesting times. Thanks. Regarding your short dollar position, is it because of tariffs, treasury expectations of a lower carry, or some other reasons?
My reason is really just more of a signal reason.
Yeah. Because it's very interesting, because I also see the same signal, but too much volatility. And actually, it's strange when I'm talking about Forex and say too much volatility, but I'm looking at it and I say, oh, for a currency pair, I will skip that signal. Yeah. So, Raphael, I hope now you will tell everyone that everything is fine and we will rip to new all-time highs tomorrow.
Sorry, before we move on, there is a question for Ted regarding ticker. Ted, you want to answer this now or you want to answer this later? It's about the ticker RFIX.
Why don't I look at that while you that, and then we can hit it at the end.
Yes.
RFIX.
Yes, that's the one. Okay, Vi. So yeah, very tough week, huh? Especially for very tough 2 weeks for deep buyers. They are not laughing anymore.
Dip keeps dipping.
Yeah. Like you said, the dip within the dip within the dip, right? It's getting very complex. So yeah, so I'm still long your USD. I sold my long CAC. Sold the long crypto, so I dodged a very nice bullet there. I tried to buy the dip in Amazon and Microsoft, and sold before the sell-off. Also dodge a nice bullet there. I'm still long gold, and I'm starting to add to this one, but I'm gonna mention some stuff regarding it. I tried to play around buying the dip using options on Wednesday. I thought we were gonna have actually Thursday to Friday a move up and the leg down on Monday, but it seems they didn't wait for it. They just went lower today. Anyway, let's dig into this thing. Up. I'm gonna try to share. Sorry, I bought a new computer and I need to authorize. Okay. I cannot share my screen because I need to quit and reopen.
I can take over.
I'm gonna make you the boss of this thing, and this way you can take over host tools. Sorry, guys. You can talk, Vi. I will make you manager.
Yes. Okay. So I will share my screen. So as Ted and Raphael said, very interesting 2 weeks. I expect we will have quite a lot of interesting weeks in upcoming years. But yeah, basically, I wanted to talk about quite a lot of things today, and what is happening, and why I was thinking that bonds needed to take a break, and of course about the very important thing that major levels broke and what to expect next. But first, I will start as usual with the correlation, and this is a 10-day correlation matrix, and Basically, we will see that stock bond correlations are very low. In most cases, they are positive, but definitely weak. Of course, we have a negative correlation to energy. Gold is not a stock, so it's just there for us to see. But yeah, so signals in stock bond correlation. I wanted to be negative, of course. So what we see here is basically 252-day correlation, which is a red line, which is there are almost no correlations in the long period. But if we go to the shorter time frame, if we go to the shorter time frame, the situation will be different. Later. I wanted to show you the chart, but again, we are having some difficulties here for some reason. Yeah, so 10-day SPY to TLT correlation is 0.11. I hope TradingView will not fail me. Yes, it is failing me. Okay, I wanted to change the time frame. But what's interesting to know that average sector correlations, and this script is free for everyone to use. You can get it on our TradingView page. Average sector correlations are actually going down. And if you take a look at the performance of the equal weight indices, so SPW and NDXE, you see, yeah, of course, everything got sold today, but these indices are down not that much. We had quite a big sell-off in AI AI-related stocks again. So apparently, at the market open, NVIDIA looked quite normal. Everyone was saying, "Oh, there is no action in the stock." Well, now we have that action. So yeah, average sector correlations are only 0.54, which is quite low, and it shows that market is not overcrowded still. So actually, in this price action and in what's happening in the markets, it's not good for bulls, because yeah, we have plenty of room to go lower, and this trade is not crowded at all. Yeah, so now about bonds, and I will show a little bit of statistics. If TradingView is not playing games with me, because for some reason it is. Yeah, so what happened? And I tweeted after the quote-unquote crazy day in TLT, which we had 1.72% update. I'm sure everyone noticed that day. And basically, when we take price data from 2020, I wanted to analyze the data from 2020 to include COVID, but to not include major financial crisis and other recession periods. I wanted to be as recent. Actually, days when TLT daily returns are above 1.1%, that I'm looking here now, that you would call a one standard deviation move, happens 74.3%. These three columns where it says normal, these are hard-coded values. It's basically what distributions would look like if we had a Gaussian bell curve, basically normal distribution. Of course, we know that markets are not normal distribution, but a lot of models assume they are. And actually, when you look at a lot of assets, you will see that when it comes to 2 and 3 standard deviation moves, and I will show other tickers, it's basically the same in the majority of assets. When it comes to 2 and 3, these are very predictable from a normal distribution point of view. Yeah, so basically the moves that are higher than 1.1%, so we can call it above 1.1 and to 2.2 only happen like 4.2% of the time. And when we switch to weekly time frame, actually currently we are sorry, 1.9% up on a week in TLT, but it's including today. And remember that today we had a little bit of a down move. So if we are not including today, and what I saw that we were quite above of what is normal for 1 week for TLT to go, and of course it's quite easy for us to understand the narrative why bonds were bidding and so, but TLT and fixed income instruments in general are pretty they like order. By order I mean usually if they move they can extend those moves, but usually they extend those moves in time. They will not do crazy 2-3 standard deviation moves over and over, especially multiple days in a row and so on. That's why I'm absolutely not surprised that today we had this pause, let's call it a pause in bidding. And actually my view on bonds is that we need a dip, but dips should be bought. And of course, it's quite a change in my rhetoric and view. I agree with what was said 2 weeks ago on our market talk, and with some other opinions that most likely we will not see bonds making new lows, new cycle lows very soon. So I still think that bonds need to be bought, but now we are at the top of the regular term range, and I will be a buyer in bonds if we get another small leg lower. Of course, I don't expect a big leg lower, but of course, market will show us what it wants to do. Yeah, just for everyone to see that basically below 90. I don't expect. Well, I expect, but it's not necessarily for us to wait for exactly lower end of the range, but at least with upside downside ratio, which is in our favor. But I think that bonds will be a nice buy. But we had a very extended move, and from a probability point of view, also both on weekly time frame and on a daily time frame. So yeah, and if we use weekly data now, so also SPY TLT correlation for 10 weeks. For 10 weeks using weekly data is also 0.13. So very weak positive correlation. Keep that in mind. And if we see the changes in that correlation, actually it is going down. So it can be a good thing if we cross back to negative correlation. Sorry. Yes, so let's go to stocks, because of course bonds are quite clear here. So what happened? I will start with futures. Let's get rid of these statistics. Volatility is going up, which is fine. Now we don't need statistics, and we don't need ranges for the beginning. So the levels. Ted was talking about 58.16. And now, what's happening here? Oh, yeah, market is low. I say, oh, so we keep dropping. Good. I prepared using regular trading hours level. So Ted was talking about 58.60, and I also mentioned that level, but that was not a major level. It was a liquidity-based level from an order flow perspective. Over the big period of time, we had a lot of action of aggressive buying there with a positive delta. It means market orders, and it happened multiple times over and over since the last time that when the market was trading at this level. So yeah, now I will go to daily time frame, and it will be easier for us to talk. So, but the main level was 58.40.25, 59.40, sorry. So 59.60 was a liquidity-based level, and 59.40.25 is a level that I was talking about multiple times. It's a yearly open for ES. Yearly open, so if you find January 2nd, it's 59.49.25. And I was looking at this level, and Raphael mentioned in his tweets, and I was talking about it in other market talks, that basically if we close below this level, first of all, what happens is, of course, that ES is negative for a year, but negative for a year, we always, at these levels, we always see flows from money managers and institutions and trend followers and other entities, so big capital injections, and usually to the direction of a move. So as we can see, a market is not stopping, and we definitely closed below that level. So now what's next? Next target to the downside is this. And apparently we are not that far away. Now market is trading at 58.80 something. Sorry. Yeah, so 58.40.25 is the next major level. It's a settlement of December contract. These levels are always important, and market has a memory. So one thing that I wanted to show is that today we basically got a confirmation. What's happening here? Yeah.
Yeah, I see many people on Twitter complaining about TradingView currently.
Yeah, and of course, yeah, luckily I know the ticker because Surge doesn't work. Okay, so if we take the exact same scenario, so January 2nd, 2025, market opened at 21,269. You can see 21,269. So actually market is below that level for multiple days. Actually, it closed below the level on 25th. So NQ was the first. NQ was the first to signal that market wants to become bearish. Let's call it become bearish, which is what it is, negative for a year. And at first I was thinking, and also I tweeted about it, that it's only tech, it's volatility in these AI names, and also market was preparing for NVIDIA earnings, blah, blah, blah. And the reason why I was thinking that was the VIX. And if you watch the VIX for the last couple of weeks, we had plenty of spikes because we had plenty of intraday volatilities in the market, but always, and I mean always, when we had a spike in VIX in the beginning of the day, it was always brought back down at the close, always, because people were buying the dip, and there was not a lot of demand for apparently for hedging derivatives and so on. So that was the reason why I said, okay, I need a confirmation from ES. So voila, now we have confirmation from ES, and it's not good. So basically, if we continue, next stop in ES is 58.40, which is with this volatility not far away at all, and then we will have 57.90, I believe, is the next level. But I will tweet those levels when we get to 58.40. For NQ, we are, I believe, looking way worse. Yeah, because as I said, for ES, the next level is 58.40, which is the settlement of December. For NQ, the settlement of December was 29.48. And guess what? We are below that. So another confirmation that last year we were talking a lot about how Nasdaq is leading, and it was the same story, just in reverse, that NQ was breaking some levels to the upside, and now we see NES was lagging, and I was waiting for ES to confirm, and of course, when ES confirmed, we had an amazing major rally to the upside, to new all-time highs over and over. Now we have situation in reverse, and the problem is that ES confirmed this move today. So if we continue, things will not look pretty. Yeah. So now let's move back to ETFs. Range-wise, let's take a look at the longer-term range, because we are definitely at the low end of regular term range. I don't think that it's even worth. Yeah, of course. So longer-term range for tomorrow is like, based on all the available data, is 565.62. So upside downside ratio, you can do the math. Now it's 585. We will go, yeah, so basically we have 30 points to the upside. Yeah, so if you are not short, which you shouldn't be, I still think that when it comes to holding things overnight and active portfolio management, shorting is not something people should be doing for obvious reasons, and unless you are using things like put spreads and so on. But yeah, what I expect, if we remain below these levels in NQ, and let's say we get a green candle tomorrow, my advice is don't chase. Sorry, because these situations usually happen statistically when we have at least periods of 3 or 4 red days, and especially when we have days that are down like more than 1% a day, and then 2%, and so on, and we have multiple of those days. Statistically, it's way more probable that now you will get at least one green candle. So don't make this mistake that the story is over, grass is green, and so on. I still think that if NQ, yeah, now I'm looking at SPY, but I want to say that look at NQ, because same story. NQ broke first, and if, for example, ES comes back above the level, but NQ stays below the level, you don't want to be long SPY, because NQ will drag it down. Yeah, so don't be exit liquidity. But I wanted to warn that after moves like that, it's quite common to see reversal candles, and in some cases quite big reversal candles. So yeah, this is a game plan when it comes to equities. I have no positions when it comes to ETFs. I'm short HIMS. I tweeted about that. It was a crazy trade, a crazy idea, because I was very bullish GIMS for years. I believe I started talking about that company in 2020, but that move was crazy, and it didn't make any sense at all. I will just show you, because there is this internal joke that basically my favorite stock is PLTR, which is true. But I was also talking about GIMS. But the difference was when I started talking about PLTR in 2020 or 2021, and no, PLTR a bit later. But I had no target. I just was very interested in that company. It looked very promising, and I thought, oh, I don't know, it will go up, but I had no target. GIMS, well, I had a very clear target, and we were multiples of that target. This was totally crazy, unjustifiable. And when I saw this last spike, and of course, also a longer term range was relatively close. Also, when we had these crazy days, I just bought a put spread. Yeah, so that was the story, which was very crazy. Because I know that someone will most likely mention, oh, you have no trades, but you tweeted. Yeah, but these trades are not something that's related to my main portfolio. First of all, small sizes, and not necessarily based on what I do with my main portfolio. In my main portfolio now I have nothing, dollars basically. Regarding dollar view, I also would want to believe that dollar will go down, but it's honestly it's hard to believe. Especially for first I will look into euro dollar, and then we can look at DXY. But for me, it's hard because these moves, and with all the Trump 2.0 moves and other stuff that's happening geopolitically, globally, in the world, it's pretty hard. One thing that can happen, well, not can happen, but that can help, is you should watch the DAX if you want to trade the euro, because in the long term you can easily expect a negative correlation between euro and the DAX. This relationship, longer term relationship, holds always because of, well, it's almost always the same with all countries that are not reserve currency. That basically you want to see negative correlation between the main stock market index and currency. So yeah, but the narrative now with Europe is, of course, everyone started chasing defense stocks. And everyone is thinking that because and it's a fact, EU will spend a lot of money. I'm sure about that. One thing I'm not sure is if that money will really go to those European companies that everyone is thinking, but we'll see. So if you are bullish on Europe, and I know, for example, Ted, you are, Ted is, if you are bullish on Europe, mainly on DAX, it can drag the euro down. So now we have multiple things that can drag the euro down. Of course, tariffs. Of course, now Europe will announce something to quote unquote fight those tariffs, but of course we know how European Union works. They will do nothing. It will not work. So yeah, but like I said, a lot of things is happening. But if you're bullish European equities, it's hard to be bullish euro. And longer term range is also, we are not even in the middle of a longer term range. Yeah, but like a loyal European, I can say that then Brussels says that they will do something. So best case scenario that they will do something in 2 years. No, it's a joke. But yeah, just that. Now these are my views. So basically watching Q because now we are unwinding and it's a second leg. Of course, 3 or 4 weeks ago when that DeepSeek thing happened, we had this unwinding in AI and then most of the names came back, but don't be exit liquidity if you see a rally in stocks because in this regime and especially how bonds are behaving and stock bond correlations are going down. I expect even short-term correlations to turn out negative. So watch bonds and don't be exit liquidity because from, again, speaking statistically, when we see this price action in the markets, I can easily say that there will be plenty of green days and, we have days of -2%, there will be days of +2%. But if overall situation doesn't change, so I'm talking about stock bonds and major levels in NQ, there is not a single reason to chase this move. Yeah, and one other thing I wanted to mention, I don't know if it's relevant, but my opinion, because I saw on Twitter that everyone is still comparing first term of President Trump to second term of President Trump. And what I mean by that is that people are saying, oh, Trump is using stock market like a voting machine, like a thermometer to see if people are happy or if markets are approving or no. So it looks to me that people are like waiting for some tweet or how now it's called truth message, or I don't know how to call that thing I don't use, but Trump will say something related to the stock market. And Trump 2.0, in my opinion, at least in the short term or mid-term, so at least for upcoming months and months and months until he does what he is planning to do, he will not tweet anything about Dow Jones or S&P or Nasdaq like in Trump first term. I don't expect that to happen at all. And one thing that he said in one of his press conferences, and he has plenty of those, and I don't remember which one it was, but I have this financial juice thing in my ears all the time when I'm trading, and there was one quote when some journalist asked, hey, don't you think that these tariffs and other policies will cause inflation problems in the job market? And it's not an exact quote, but you get the point about the question. And Trump's answer was something like for long-term success, short-term pain is okay. So what I take from this is that Trump 2.0 is fine with market going down, and maybe he even wants that, but I don't know. I will not say that, but he's totally fine if we get a 10% move in S&P. I don't think that Trump will tweet something about it. So that's just my opinion. Of course, I have no idea what's going on in his head, but I wanted to see that if some of you are thinking that we will get this period where Trump will tweet and stocks will go up. So stocks will go up based on Trump's tweet. If he tweets something else that market likes, but don't expect Trump to tweet about stock market directly. And yeah. So I think it was one of my longest talks from all the, yeah. So I hope it was useful. Okay, let's move to Raphael. Wait, so now I'm the boss?
No, I switch it back,
Oh.
but I'm not sure if I can share. Okay, it's working. Okay, give me a sec. Just want to be sure.
Yeah, but there was issues with trading views because I couldn't change settings with any of my tools, and I wanted to show correlations for different periods. And
okay, is it working? Can you see?
yes.
Okay, I'm allowing. Let's put that somewhere here. Okay, we should be good. Okay, so this was a box I drew regarding the chop we were experiencing for now, what, 3 months? Yeah, since the end of 4 months or almost, since November. And you will see also, you will see on NQ that we actually broke this box. So we used to be sure that the bottom and the top would hold because you had either a bottom cap or an upside cap anytime we were approaching the extremities of this box. But currently the situation is not the same at all. You can see here the long-term range are going down, the normal range are also going down, and you have no cap. So I think this is a big signal that you are getting. Of course, like Vi said, we are going down for now 5 days, and we are below the normal range. So one should expect some kind of a bounce. So of course, you will not be shorting here. But considering what we are seeing with the range, considering that we broke trend here, I would not encourage you to go long on either ES and Q, and of course on the main big cap stocks. I'm gonna go over some names later on in my talk, but most of them they broke trend. They look absolutely like dog shit. And anytime we had a bounce opportunity, a buy on the daily, a buy the dip signal, sure, we got 1-2 days bounce, but then boom, it was smacked down. So this is not very encouraging for bulls. Another thing, so I know it's not very popular with some, but I think seasonality is very important to consider. And you can see that usually the period we are in is not very favorable for bulls. So this is something you should always consider. You should know the seasonality of the S&P before expressing your view. Regarding Europe, so of course the joke is still on. Why buy the US when you can buy the DAX? So it held pretty nicely, but I'm starting to see some things that are actually not good regarding DAX. So far, anytime we had it, the volatility here, blue, volatility starting to rise, it was a buy the deep one. Will it be the same thing? I don't know, but volatility is rising. Okay, considering what we had in the US stock market, I decided to cut my CAC long. So I should have played DAX, but yeah, sometimes I make some stupid decision. But anyway, so I was long here on the CAC on the cross of trade and trend, and I got out here. That was somewhere here. I got some mega sell signal, and also I was seeing some horrendous stuff coming from the US, coming from crypto. So I decided to cut this one, considering what I see in the DAX with volatility starting to rise. I think it was a proper decision. So I will monitor what Europe is doing. But if those ones start to go as well, it's not going to look very pretty for later. Another one that is not looking good is Nikkei. So the same things were happening in Nikkei anytime we had an opportunity to break the outside of the range we've established, the box. we always got caps, top, bottom. Now the caps are gone, and Nikkei is actually breaking trend and confirming. So we broke trend on the 20th of February, and we confirmed on the 21st. Interestingly, it was the exact same day that we confirmed the break of trend in most cryptos. Now going to dollar. So we mentioned that in the previous show, we had the trend break on the 13th and confirmation in the days after. So now of course, we are having some kind of retest. My expectation, if the move on the dollar, the trend change on the dollar is confirmed, is we should get some kind of relief rally in the 108, and then we continue to go down. So basically, it would look like something like that. Yeah, something like that. You have the first move of the trend break, you get some kind of retest, go down. It's always the same. Here, up, retest, and then you get the meat of the move when everybody starts to realize, okay, we really have the trend change, and this is when you get the acceleration. So that would be my expectation. I chose to express this view by being long euro. So I'm long since I think it was somewhere here on that day. I'm waiting to see. One concern I have regarding Euro USD for now is we haven't had the cross of trade and trend. So for now, it's a trade by anticipation for Euro USD. We try to go bullish. We are still neutral. It could be the early coming of a bullish trend transition, but I want to see trade and trend cross. This would be the final nail in the bearish trend for Euro USD, and the confirmation that we are about to experience some kind of move up. Considering what Vice said regarding inverse correlation between DAX and Euro USD, I'm seeing volatility increase in DAX, and I'm being bullish on Euro USD. So far, I'm not seeing any, let's say, logical issue. So I will be monitoring here Euro USD going to the bottom of the range, maybe retesting trend. I hope not, because I would risk to be stopped out. But I want to see trade and trend cross. This would be the confirmation as far as I'm concerned. So VIX, I mentioned the last time that it's very difficult to make a call regarding that. The issue is you have trade and trend very far from volatility trend very far from each other. So far, anytime VIX tried to break MFR trend, it got smacked down. If you are using my matrix indicator also, here we are almost at the place I would look for a dip in equities. So here, so very difficult to say, okay, we're gonna get some kind of VIX rip with a big sell-off, considering what I see in the VIX. So it would confirm that a short-term bounce should happen next week. That would be my expectation. I think we get some kind of short-term bounce, and then we get the continuation of the leg down in ES, in NQ, etc. But yeah, very tough call to make on the VIX. Very, very difficult to read. I mean, usually they are trade and trends, they are very close to each other. Now they are very, very far apart. And it's been like this since Trump won. Very, very difficult. That's why you have the chop. So good luck if you can extrapolate anything from the VIX. Now let's go to oil. So we had our little enjoyment in end of December with trade and trend crossing and the bullish pattern on CL, And since then, typical action of bearish asset. Anytime we have a retest of trend, boom. So I'm talking about this time, I'm talking about MFR trend, boom, retest, boom. Anytime it's getting smacked down. You can see it expressed here in terms of volatility. So blue is volatility. You can see volatility is rising. This is definitely what a bearish asset looks like. When you see that, you're not trying to buy the dip. You're trying to short the rip. And let's say you want to be bullish on oil, you have to wait for the same kind of pattern again. You have to wait for trade and trend to cross once again. So for now, short the rip on CL. Anytime it goes to MFR trend, just smack that down. Now, Jesse. Okay, very nice. Finally, we are having some kind of sell-off. So my thinking right now is many people missed this rally in gold. Many people were waiting for a dip in gold. So my first thinking now is, okay, everybody's going to try to buy this one. Maybe first be very small, because usually what happens when everybody is thinking like that, you get a bigger dip. So that's my thinking right now. Regarding what the signal is saying, so you know this, I always mark the mean. So this is where trade of volatility. So here it's a black one. It can be white. It depends on your background on trading view, right? Where it usually goes before you have an explosion of volatility for the asset. So we arrived at the mean here. It was, let me check to be sure. 2 point. Yeah, it should be. Yeah, it should be here. Okay, so this was when we reached daily mean 1. So I call this like this. If you watch the video I did about my volatility script, you know what I'm talking about. If you don't, go check that video on our channel. So you know this is a potential top, first potential top for gold. So you should have sold some here. Now we're starting to see volatility increase. This is the blue here. Trying to zoom so you can see. Okay, and we have the first retest of trade here and retest of bottom of the range. So this is a decent thinking to start dipping here. Now what we are waiting for is either we consolidate. So I'm gonna watch matrix here. I want to see this thing stop going down and start to go back up, or we are waiting for a bigger dip. The bigger dip will be usually trend, so volatility trend. So we will be waiting to add here. Okay, this would be our next stop. And if we have a bigger dip, then we are waiting for MFR trend to add at that point. That would be the way I will play it. The thing you need to keep in your mind is we volatility trade already got to the daily mean 1. That means it has happened in the past that it was a top for gold. Okay, so we are adding, but we are adding because we are already long from much lower. Okay, it's not like I'm starting a position right now because I have no position because I missed it and oh my god, it's dipping lower and I'm gonna get smoked. Okay, so you have to consider we are going small, and we have to think, okay, it could be already the top. Okay, the meat was from here to here. Okay, so you need to consider that. If we get a reject, so blue here, get a reject down, test, it can test the green, it can go a little above, it doesn't matter. But if we get a reject, the next target for volatility trade will be daily mean 2. Okay, so the values are here, you can see. If you want to mark them, 2.6, 2, it's 1.9 and 1.1. Okay, so if you are using my script, mark those. and be aware of the current situation regarding volatility for gold. I'm using JC. It's I think it's much more accurate than the gold ticker. And silver actually looks the same. It's just that usually silver is a little bit more aggressive in terms of selling. So you can see, so look at this pattern. We are basically in this scenario. Okay, so we would be looking for retest of trade, even trend here. So that would confirm your view for gold. Okay, you need to think like that. Okay, now in the last show, I said the Bitcoin was in a do or die situation. Okay, so it's basically dead. Somebody shot it. So I got out on 21st, but I was not long Bitcoin. I was long Ethereum. Yeah, I had a buy on my buy the dip script here, which suggested, okay, maybe we have a bottom on Ethereum, and we should expect some kind of reversal for volatility, trade of volatility, but it wasn't happening. On the 21st, we got confirmation of the trend was not changing in Bitcoin. I was looking at, I'm going to show you some other cryptos. I was looking at our cryptos related assets. This one is not a crypto, but I was looking at that. And sorry, this is the, normally I have another, okay, it's not this one, okay, sorry. But all the cryptos you look at, they look absolutely horrendous. And they looked horrendous on Friday. So I took the decision to get out. Looks like it was the right one. So now the problem is we have to wait for the setup that you know of. We have to wait for volatility to come back down, trade to come back down, trade to cross trend, and this is when we will come back. For now, you are just doing bottom searching, and bottom searching can be very painful. So despite the fact that we are at the low of the range, Bitcoin looks the same. It's really, really huge selling. I would not buy this dip now. I would be waiting. So if I get a buy or a mega buy, I may consider some kind of play, but for now I get nothing. It's barely oversold. Matrix is quite far from bottom, so I'm pretty sure we will not get a buy or mega buy signal before a few more days. So let's wait. Let's wait. We got out at the right place for the right reason. Now we just wait. Regarding yields, so the last time we were talking about the fact that we could have a phase transition. We saw volatility rising since after the second half of January. So here, that was the talk from 2 weeks ago. And we were mentioning that so far, MFR trend was holding. We were waiting to see what would happen on the bounce. And what happened was went to the top of the range, rejected, and started to break MFR trend. So this is what we got. Your first clue was this. If you are looking at volatility and you see this in an asset, you're like, okay, this asset is about to become bearish. So this one is the US 10-year, but the US 30 years was looking the same. This was the arrow from last time. I didn't update the chart, but volatility was rising. This was a big clue that something was about to happen. And if you go to, let's go to TLT zeros and and EDV. So yeah, that was from last time. It's the same thing with your USD. So we took the bet in term. How to say, it was an anticipation trade, right? We were expecting based on the signals we were getting from US 10-year and US 30 years. So if you took that trade, I didn't, but if you took that trade, it was a play. Now the problem is, as for Euro and USD, we don't have a cross of trade and trend yet. Okay, and phase transition in bonds can be quite aggressive. You can see here, this was the phase transition in 24, and okay, boom, 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 boom. It's very, very aggressive. So Vi mentioned that the move we've experienced so far was very exceptional. The best idea would be to actually take some profit here and wait for a retest of this area. And then you wait for trade and trend to cross, and this is when we will get the parabolic move. TLT, EDV, and zeros look absolutely the same. So you took the trade anticipating a trend change, good. But phase transition are usually very aggressive again. Look, you should expect this kind of price action. For 4 or 5 days, it goes like parabolic, and then in 2 or 3 days, it takes the elevator down. Zeros, same. Okay, so you need to consider that. Once you see trade and trend cross, this will be the signal for the parabolic move. And then you just sit, you do nothing, you wait for this parabolic move, and you wait for the top. This is when you exit. So that would be my my suggestion. I promised to check some big cap names. So Tesla, absolutely horrendous. So we broke trend on 7th of February and just confirmed the very next day. So you should not belong this one. We had a buy here that was negated. Nothing happened, just kept going. This is very bearish, very bad. One of the darling of everyone is Palantir, so same. Since we got the mega sell, so I'm going to show you. Usually mega sells are more useful. Since we got the mega sells here in this area, just dumping and dumping here. Trend break, tried to go, and today they smack it down again. Same thing happened in Microsoft. I tried to buy this dip, got stopped out. I tried again, I think it was Tuesday, and I sold just before the sell-off here. Amazon, same bearish trend. I got in somewhere here and sold again today, small profit. I get mega buy signals, etc. But the problem is, considering what I'm seeing in the overall market, it's not very encouraging. I mean, the last soldiers are, I think it's Meta, but Meta is also testing trend. So what happens when this one go? Apple actually is gone. Okay, it's neutral, but about to go. I would not be surprised to see a break and sell off to in this area. So what happens in the overall market when you see that? So yeah, I mean, it doesn't look good, right? It's not appetizing. So the position you should be in right now is cash. And you could look for dips in gold, considering the issues I have mentioned. And for now, be very agile in your bond positions if you are long, until you have a cross of trade and trend. This is when you can sit and enjoy the show. Okay, I hope it was useful.
Yeah, very interesting. Yeah, cash is my favorite asset class, you know. So yeah, I totally agree. But I just checked in the US stock market, there is no stock with a ticker Doge, DOGE. There is some OTC stock, Doge, but it doesn't matter. So I think that Tesla should change a ticker. I think it would help with this recent sell-off. So. And yeah, because that ticker is available, so I believe.
I mean, it would be funny if Elon joining Trump team was actually the top for Tesla.
Well, at least for because now we are. Well, 1 second. Now we are. Now we are for 41% from the peak. So of course it was the top for quite a while at least.
Yeah, the
Well,
problem is,
unless Tesla decides to jumped back to highs, which, well, if I had to make a bet, it will not happen soon. But yeah.
Let's go to the questions. So one question was for Ted. It was so RFIX. So
Yes.
any chance you've looked at
So
it?
I did look up RFI. Oh, sorry. I did look up RFIX. It is a simplified product. It is a levered 5 to 7 year bond, and it trades about 30,000 shares a day. It's a new product. It came out in early December. It was down like 2.7% today. So I think TLT was down about 1.5. I personally would play it with TLT if you want to get leverage on a 5 to 7 year note. But if you like the leverage and you think long bonds or the middle of the curve, which is working well, you have to say the middle of the curve is working well. So if you feel like you need to have that leverage, it's certainly, and don't want to use options, then it's certainly a way to do it. And Harley Bassman at Simplified does a great job, the convexity maven of building products, and I've used his products, like his products. I'd just give this one a little bit more time. It doesn't, if you need to get out, it's thin liquidity, and I just don't like it.
Raphael, you are on mute, I believe.
Yeah, sorry, because I didn't understand the comment from somebody. He said TLT number 45 at the close, Ted.
So number 45 is most likely previous market talk.
Market talk 45. Yeah. I've not been long TLT. It has not been. It's still bearish trend in my book, which is I use time series price momentum 55-day. Been bearish, still bearish. It's tried to make a few pops into bullish territory. I mean, I want to own it, but I'd like to. I hope Raphael sends me a signal, because I think when that thing goes, it's going to go. And as soon as people start to realize what's happening here in the US, I think that longer duration bond is going to really pay. I know not Keith McCullough is long zeros. And so that's another way to play leverage or a more dramatic. If you really need juice in the bond market, that's the way to go. So, but yeah, it's definitely behaving well, right? It's harder to deny. I mean, it's positive. It's good if you want to buy TLT before it gets bullish. Go for it.
I mean, if you bought when we mentioned that the phase transition was happening, I would guess the best way to play it is you sell some when at the top of the range, and you buy some at the bottom of the range until we get the resolution with trade and trend to cross, and then you keep your position and you just wait for the rip to come. But for now, you need to be like you watch the range, and bottom buy, top you sell maybe 2/3. Bottom again, you buy this 2/3 back, and you just do like this for now. And you have a stop, you have a hard stop, so you make profit while the trend change is confirming, or if you get some Trump tweet, maybe you will have made some profit before getting stopped out. But yeah, watch this trend cross. I will post it if I see it for sure. And
my degenerate side wants to say that if you want leverage in the bond market, buy options on UB or ZB. Works like a charm. No, really. You take a futures options on the futures contract of ultra bond, and you will have plenty of fun.
And I mean, to conclude this show, you guys think we are the stock market is heading for a crash or not?
It depends what you mean by a crash. If we are talking about things like recession, 50% down or so, most likely not. If we are talking about correction, like a 10% correction, or at least increased volatility with extended moves, yes, for sure.
I don't know. It certainly is starting to bake. It's starting to bake. I mean, you've got volatility moving up, price moving down. If people decide they want to get out between now and OPEX in March, could well be. But I think there needs to be some sort of larger catalyst, some sort of unknown if you really want to get a crash sell. I think there's a lot of buying that just takes place by passive flows into the market. It's just not going to, particularly SPX is not going to crash. I mean, you're getting that in some of the single names, so I don't think so. But I'm not long. I'm not long.
Unless we will get way more serious issues in mega caps. But yeah, look, now SPY is 4.5% from peak. So if and I expect increased volatility with big moves. So of course we will get massive green days for sure. But now we're at 4.5%. I mean, we can. It's more from a risk management perspective, like a warning that in this regime, I mean, we can have a 10% from peak easy.
Yeah, 5,600 is my number for a measured move. Once it breaks that level that Raphael pointed out, the 5850, that if we get below that, that's the next one to look at. I think you said something similar.
Yeah, 5840 is a major level. 5860 is less major, but also level. Yeah, major levels I usually call settlements and openings from important periods.
I'm on the same idea as you guys. I mean, I'm thinking we get at least a 10% down move overall.
No, but I'm not calling moves like in 2008. No.
Yeah, it's yeah, I don't think so. Just yeah, at least 10%. And when we start to get to -10, maybe -15, I mean, I will be starting to I'm gonna deploy capital. Like that.
In other words, yeah, deploying capital is good. But in other words, Joe, I wouldn't be selling volatility here. That's for sure.
Yeah. I know what you mean.
Selling put options left and right. No.
I know what you mean.
Because in other regimes, I love to do that, but no.
Yeah, but again, I would encourage people who so if you are looking for long-term swings in certain names, wait, don't rush. Don't rush.
Definitely.
Please be patient.
Definitely.
I have my favorite Furu is calling for PLTR at 50. And
actually, I would say 40, and you know how bullish I am on that stock.
Yeah, I know.
So it means something. But yeah, PLTR 40. I would love to see 40, and I'm eyeing that level based on my calculations. That if we get there, maybe. Don't quote me on that because it will depend on the overall situation. But maybe I will dabble a little then.
Okay.
Yeah.
Okay.
40 would be great.
Good.
So yeah, I think we had a great show, and I also think that 2 weeks will be exciting. For some reason, I have a feeling, and I also have a feeling that almost every show I will have that same feeling that upcoming 2 weeks will be exciting. Yeah. So risk management, and like Raphael said, and for me, today is easier for me because usually I'm the one, cash. Now at least we agree.
Yeah, cash. Definitely, cash was the move to take at least at worst last week. It was the moment to get out. So, man.
One thing that changed from my rhetoric, like I said in the beginning of my presentation, that what changed? Now if we get a decent dip in TLT, I will buy some. And usually I hate these things, but
Good. Okay, let me check one last time if we have no more questions, and if not, we wrap it up. Yeah, nothing more.
yeah. So thanks, Ted. Thanks, Raphael. Thanks everyone for watching. I hope it was useful. And as always, risk management is key. And yeah, manage risk well and be safe out there. And see you in 2 weeks. Bye, everyone.
See you in 2 weeks. Bye bye.
Good night. Bye.
Thank you.